Hey everyone, welcome back to Corporate Decoder, the place where we decipher those complicated corporate filings. Today we're diving into StandardAero's proxy statement. It's like their annual report, but instead of just looking back, it's also asking shareholders to make some important decisions. Think of it as a corporate popularity contest, only the stakes are way higher than prom king and queen. And believe me, there are some interesting characters in this story you'll see. First up, let's cover the basics. This proxy statement is dated April 2025, and it's all about getting your vote at the annual stockholder meeting coming up in June. This meeting isn't in some fancy boardroom, it's completely virtual, so grab your coffee, log in, and get ready to participate from your couch. What are we voting on? Well, there are a few key proposals. First, we need to elect 3 Class I directors Peter J. Clare, Russell Ford, and Andrea Fisher-Newman to serve until 2028. Consider this the main event. Directors make the big decisions, so it's important to choose wisely. Next, we're asked to ratify or approve the appointment of PricewaterhouseCoopers LLP and Welken accounting firm for the year. They make sure the numbers are legit. We also get to weigh in on executive compensation, or how much the top bosses get paid. There's a vote on the frequency of these advisory votes and another on the compensation itself. Think of it as a shareholder report card on how the executives are doing and whether they're worth the big bucks. Now, before you cast your vote, the board is giving some recommendations. They want you to vote for the director nominees, for ratifying the accounting firm, 1 year for the frequency of executive pay votes, and for approving the executive compensation. The board has made its opinion clear on what to do. Speaking of voting, you might be wondering how it all works. If you hold shares directly, you're a record holder. If your shares are held by a bank or broker, you're a beneficial owner. Either way, you get to vote, but the process might be slightly different. Make sure your voice is heard. So how many votes do these proposals need to pass? For electing directors, it's the plurality, meaning the 3 nominees with the most votes win. Approving the accounting firm and the say on pay proposals require a majority of the votes cast, excluding any abstentions. There was actually a change in accounting firms in November 2024. PricewaterhouseCoopers LE Canada. This is a pretty routine change, but it's worth noting. Time to talk about the money. In 2024, PricewaterhouseCoopers LLT, United States, billed StandardAero about $3.8 million. That includes around $3.7 million for audit fees and $124,000 for tax consulting. It's good to know where the money is going. Let's meet the team. The filing lists all the executive officers like Russell Ford, the Chief Executive Officer Daniel Satterfield, the Chief Financial Officer, and a few other presidents. It's helpful to see who's in charge and what their backgrounds are. Now let's talk about corporate governance, which are the rules of the road. StandardAero has guidelines, a code of conduct, and committees to help the board do its job. You can find all these documents on their website, which the report doesn't mention the URL. Who's really calling the shots? Well, the board has determined that several directors are independent according to the stock exchange's rules. That means they don't have any major ties to the company that could influence their decisions. Russell Ford as CEO is obviously not considered independent. There's also a stockholders agreement with Carlyle Partners and GIC Investor, 2 major shareholders. This agreement gives Carlyle the right to designate a certain number of directors depending on how much stock they own. It's all about who has the power. The board is divided into committees like the audit, compensation, nominating, and corporate governance, and executive committees. These groups focus on specific areas, making the board more efficient. Alright, time for the juicy stuff, executive compensation. This section explains how StandardAero pays its top executives. It's all about attracting, motivating, and rewarding leaders who can drive the company forward. What are the main components of executive pay? Base salary, cash incentive bonuses, and equity-based compensation, like stock options. These are designed to align the executives' interests with those of the stockholders, so if the top guys make money, the shareholders do too. For 2024, the cash incentive bonuses were based on revenue management EBITDA, which is a type of profit and operating cash flow. The NEOs earned a bonus of 114% of their target bonus amount. When the company makes money, so do the executives. Check out the table of what people own as of the end of 2024. Again, a lot of this is unvested stocks, which depends on if the company continues to do well to fully unlock for the executives to benefit. Finally, the audit committee reviews the company's financial statements and makes sure everything looks good. They're like the financial watchdogs, keeping an eye on things. Time to break down who owns what as of April 17, 2025. Investment funds related to the Carlyle Group own over half of StandardAero's stock. The GIC investor owns a significant chunk too. It's important to know who the major players are. StandardAero has a policy to review any transactions with related persons like directors or major stockholders. This is to prevent conflicts of interest. All these transactions have to be worth more than $1,200. There are consulting agreements with Carlyle Investment Management and Bima Investment, an affiliate of GIC. These agreements involve annual fees and reimbursements for services. This gives more insight into what both companies are doing for StandardAero. Now let's zoom out and look at the big picture. StandardAero is in a complex dance with its major shareholders. Their ownership stakes and agreements directly influence the company's governance and operations. While the company's performance metrics are clearly defined and linked to executive compensation, relying too heavily on metrics like adjusted EBITDA could be risky, as it might not always reflect the true financial health. Ultimately, StandardAero seems to be navigating a tricky path as it balances the demands of major shareholders with the need to foster long-term sustainable growth. That's it for today's Corporate Decoder. If you found this breakdown helpful, give us a thumbs up, leave a comment, and subscribe for more deep dives into the world of corporate filings.